All right, welcome to the Real P&L Trading Show, where I share my real P&L on 4 accounts and share my proprietary safe wheel for free. Guys, type in the chat for me. Let me know that my audio is working okay. I want to make sure everything is working good. Also, be sure to post any questions that you might have, because sometimes the broadcast, you guys are posting questions, and I'm getting ready to end the broadcast, so there's a little bit of a delay. So get those questions in early. All right, Will tells me that you can hear me. Steve, thank you. Audio's good. Great. All right. Let's get into what happened. Thank you, Thor and Scott. Let's get into the earnings edge. What happened last week with the earnings edge? You can see my screen here. I traded AMAT. You can see AMAT's up $1,366. I made money on this previously because I didn't make that much money. I did make some money, but I didn't make this much money on AMAT last week. But I did trade AMAT and I made some money. Let's see. I have it in the spreadsheet here. Let's bring that over. AMAT made $327 last week on AMAT. Since my update in late 2022, I've got 32 wins, 25 losses, 9 break evens. My win rate is 56%, and my average win 651, average loss 612. I expect my win rate to go down and my average win to go up because of the way that I kind of tweak the trade. Kind of looking for the big wins. For a while there, I was just looking for a decent win, but now I'm looking for the big win. And I had a higher win rate, but now my win rate's going to drop, but my wins are going to be higher. So that's the way that I'm exiting the trade now. Also, I do want to say happy Veterans Day, especially for all you guys that are veterans. I'm actually headed off to the Veterans Day Parade today. It's, from what I hear, it's the largest Veterans Day Parade in the country that they hold. And I live in Clovis, but it's in Fresno. And so I'm going to be over at the Veterans Day Parade later today. Okay, so happy Veterans Day. Okay, so let's go on with the earnings edge. So let's see what the account is valued. Let's make sure I'm in the right account. I believe this is it. Yeah, 79.37. 79.37. So yeah, you can see I'm up a little bit. 79.37. What's SPY trading? Let me check that. 598.95. That's up pretty big. 598.95. That's a really big. Wow, 26% this year. But you're outperforming last year. Wow, what a year there. Okay, so you can see that the market's up really well this year. I guess it's because Trump got elected. I guess that has a lot to do with it from what I'm hearing. I mean, there's always different theories on why things are happening. So looking at the returns here on the earnings edge, up 58.74% since the beginning of 2022 when I started sharing my P&L and showing the results of my trades. The S&P 500 is up 26% since the beginning of 2022. You can see that I'm down this year, so I'm not going to hide anything, right? If I'm down, I'm down. The numbers are what they are. So the earnings edge is underperforming this year by, pretty significantly because of the fact that the risk-adjusted returns, it's a lot more risky than holding the S&P. Okay, let's go to the PL5 Pro. And this account started with about $404,000, and I got in when the S&P was trading around 548.99. Let me fix this. This should be, let me fix the spreadsheet, F22. This should automatically update there. Okay, let's see what the value of that account is. I think that's 527. I've got a few accounts here, so I got to kind of hunt this account down. Look at this one here. 446, 301. 446, 301. Just put that in there. So down a little bit. 446. 331. Okay, so looking at the market's just been a serious bull run since July 19th of 2024. That's when I started tracking this and started actually applying the PL5 Pro. And you can see that the returns are 10.5% with the PL5 Pro, and the market's up really a lot in 9.1%. So outperforming there. With the PL5 Pro, it's going to be difficult to outperform the market in a bull market. This is obviously a bull market from July 19th, but it's still outperforming, but it is difficult to outperform now. So that's what's going on with the PL5 Pro. Now the PL5 Pro S&P variant, not so difficult to outperform the S&P. So I'm going to go into the S&P Pro variant now. Let me refresh this page. I can't show you the whole page here on the Interactive Brokers because they kind of tweak their system to where I can either hide the account and you can't see anything, or I can have the account there, but I can't bring it all the way onto the screen because it'll show my account number. So you can see what's happening with my account there live. This is my Interactive Broker account. 32,655 is the balance. 32,655. 32,655. Let's put that into the spreadsheet. 32,655. Okay, so this one, again, because I just started the Premier Level 5, the Pro part of it in July, this is the PL5 Level 5 Pro S&P variant. So this one specifically is to outperform the S&P, and it can go down with the S&P. But this has been done since July 16th. 2024. I started the account with $30,000. Now it's at $32,655, up $2,655. And by the way, my PL5 Pro is up $42,000. Just want to let you know that. But the PL5, this variant, starting with $30,000, is up $2,655, up 8.85%. And the S&P 500 is up 6.33%. So the variant, the PL5 Premier Level 5 Pro S&P 500 variant is outperforming the market, and I expect it to continue to outperform the market. But it can draw down with the market, where the S&P, where the PL5 level, the PL5 Pro, it will draw down on that first leg down when the market goes down, but then after that, it'll recover very quickly, where the S&P variant is going to continue to go down with the market. But it outperforms as it's doing now. Okay, so that is the Premier Level 5 Pro S&P 500 variant. Let's talk about the safe wheel. Safe wheel last week was not a good week for the safe wheel. If you recall, the stock that I'm in, which is Pinterest, went into earnings, and I had a couple options. So let's show the account here. Let's show the account. This one here. So PIN, so I'm long 200 shares. You can see 5,644. So what happened here? So it came into earnings. I was long 200 shares, and you can see my average price is $33.50 a share. I could have sold this $33.50 here probably for like $2 and really collected a lot of premium, and I could have been conservative and actually probably been ahead. But I did not want to be conservative, so I was more aggressive, and I sold a further out of the money call on these 200 shares, collected less premium, but gave myself all that upside potential. Well, what happened? The pins came out and they did earnings, and it dropped about, I don't know, somewhere between 10 and 15%. So obviously my account, my 200 shares are going to do the same. So you can see them down on the shares around $620. And my put hedge isn't really paying off because it's not really close enough to the money that as it could be or, because what happened was, that perfect scenario where Pinterest, when I first got in, went up higher, and then I sold puts, and then it went lower. So it's kind of like that perfect storm, which happens kind of rarely, but it did happen here. So here's where I'm at, down 874. So this one's down pretty good. Let's see, 56.25. Let's put that into the spreadsheet. 56.25. So some of you were more conservative and you probably came out ahead, and some of you were aggressive like me and you did not come out ahead, right? And saying that, I forgot what the balance is. 56.30. 56.30. Okay, 56.30. So down a few hundred. Yeah, like $300. Okay, so now you can see outperformed in 2022 with the safe wheel. One thing about the drawdowns, this is obvious. This is way the highest drawdown that I've seen with the system, and this is not unexpected. I mean, we've seen the market draw down 35% back in 2020, so that's the highest drawdown that you've seen in recent times. This is down 12%. This is not something that I did not expect. I mean, it's not like I didn't expect it. I mean, this could totally happen, and it did. So down 12% this year. The market's up 26%. So it's hard to really, beat the market, at 26%. That's a big run, and up 24% last year. But you can see I'm up 12% versus the market 26%. So I'm actually being outperformed, but yeah, still being outperformed because I have about half the drawdown. So this should be around 24% versus 26%. So a pretty kind of break even with the market, kind of, because of the risk adjusted returns. But, that's how the safe wheel is doing. Not that good this year. And it really doesn't have to do anything to do with the overall market. It has more to do with the specific stock that I got in went up, and then I sold puts, then it went down, and then I owned the 200 shares, and then it went down again. So that's kind of where I'm at. But, I own the 200 shares. We're going to see what's going to happen. What am I going to do next here with the safe wheel? Let's see what I'm going to do. So I own the safe wheel here. This is my average price, $33.50, but I got assigned at $33 and $34. I own 200 shares. I also have a put hedge and a long call hedge for my put hedge. So first thing I'm going to do is make sure my hedges are in place properly. I'm going to ask myself 3 questions. Number 1, do I own 200 shares? Yes, I do. Now, did my put hedge pay off? In other words, is this 240, would this number here be more positive than this number? Obviously, I'm down on both, so the answer is no. Is this 100 days or less? No, if it was, I would move it. Now, and then is this 24 strike within 70% of this price, 30.47? Let's take a look. 24 divided by what? 30.49. It's 78%, so it's close enough. If it was under 70%, I would move it closer. Nothing to do there. I have my long call. It's 31.50 call. I paid $5 for it, just to protect myself in case something crazy happens and Pinterest goes to $50 or something. I don't want to lose all of my value of my put, even though it's only down to 54 cents. Okay, so my hedges are good. Now it's about running that regular wheel strategy. I own 200 shares. I want to sell covered calls. Where do I want to sell them at? Well, not below, or at least equal to or higher than my assigned price. Well, I got assigned at $33. I got assigned at $34. So let's see if I can sell. And I want to do it out this 1 week. Someone asked the other day if we could do this on a monthly basis. Sure, we could do it on a monthly basis. So I could go out 1 month here. It'd be less things to do. Easier to manage for sure. Okay, so $33, not enough premium. I need to get at least 31 cents. At the $33 mark, I can't. At the $34 mark, I still can't. Okay, I can't collect any premium here below or at my assigned price. So I'm going to do the blaze of glory, which means I'm just going to sell premium here below my cost basis and possibly take a loss on the shares. That's possible. Which, because I have a hedge, it's not as like if you run the regular wheel and you're constantly taking losses on a stock because you're getting out below your assigned prices. That's not a good thing. But if you have a hedge, it's not that big of a deal because you have a hedge to protect you. So that's what this system has. It's hedged. It's the hedged wheel. Okay, so I'm going to go here. I like to go at the area where I can get premium and then one back, but I'm not going to go one back. I'm going to go here. I'm going to go at the 31. I'm going to do a blaze of glory. I'm going to sell 2 of these right here at $31. So if I get called away at $31, I'll take a loss on my shares, but I'm always collecting ABC, always be collecting premium. Okay, so I am going to mids 33. I'm going to do 2 of these because I own 200 shares. And now the mid dropped to 30, 31. Okay, so let's do a blaze of glory trade. And let's see, make sure this thing, when is this expiration cycle? I want to make sure I'm in the right expiration cycle. 15th of November, yeah. Okay, 33, maybe I can get 33 cents. Okay, so filled at 33, did the blaze of glory trade. Could really high probability or possibility that I'm going to get called away at $31, lose a couple $100, a few $100 on my shares, but I'm always going to be collecting premium. And if I get called away, I will probably pick a different underline because I don't want to get the accounting rule. I don't want that accounting rule to affect me. The wash sale, right, where when I take a loss, I can't write it off. Okay, so that is the safe wheel for today. Let's go in to see if there's any comments or questions. Okay, less is more says I beat shovel, but I still feel like I'm not first. Very good. Will says happy Veterans Day. Thanks, Will. Kevin, good morning from Lakeland, Florida. Will is a former Marine. Happy Veterans Day to you. That's awesome. Less is more says thanks for your service, Will. We appreciate that for sure. And Will says yes. And Will says time for a blaze of glory trade. That's right. That's what I just did. David Marcelino, does your strategy work on futures? Well, the way that I have it sized is I like to only deal with stocks between $20 and $40 because of the way that, I do 3 put hedges and I sell one wheel, one contract on the wheel. So because of the sizing aspect of things, you would have to back test the sizing aspect on the strategy, but it should work as long as you've got your sizing in check with any underlying. There are some rules that I use that you have to have a certain amount of premium. There's some rules that need to be applied for that. There's a fast track course that you can get. It has everything in there if you're interested in that. But yeah, there are some rules. As long as you abide by the rules and you understand your sizing, it should work on any underlying. Will, thinking of martingaling on the safe wheel and adding money to the safe wheel account and doubling down. I'm an ex-gambler. Yeah, I don't. Okay, you guys see how much money I have in the safe wheel, and you see how much money I have in the Premier Level 5 Pro, and you see how much money I have in the Premier Level 5 Pro S&P 500 variant. So that will tell you a good indication of how much risk I'm willing to take with certain trade plans. Okay. When there are many covered called strikes with less than 1% premium, and I've been taking a midpoint strike and taking much more premium, it seems to work better. Yeah, so it's a lower risk situation. So last week, you maybe sold the $34 call. and you collected $1.50 or $2. That is a more conservative way to run this strategy. And if you want to be more conservative, there's nothing wrong with that. I wish that I did that, but of course I was being more aggressive, and I lost on being aggressive. So you can tweak this to make it more aggressive or more conservative. And it sounds like you went with the more conservative route, which worked out really well going into earnings with Pinterest last week. Let's see. Will law of averages say SafeWheel should be getting a big boom soon? Yes. And Shovel, after about 20 comments, says that he's first. And says, let's do SafeWheel on Super Micro. Okay. Just make sure your sizing is good. And less is more. Make sure that I answered your question there, or abided by that I answered this here, that I addressed this. I want to make sure that I address that properly. Will, that $5 call is giving you great protection this week. What a great position. Yeah, that $5 call. Oh, you know what? I like to. Yeah. That thing is is up to 16 cents, so it's already tripled in price. So that was obviously a good buy there so far. Avery says, don't forget, guys, to hit that like button. I really would appreciate if you hit the like button. That will help not just me, but it helps other people see, hey, these guys out here that are instructors need to share their portfolio and their P&L, right? And that's what I'm doing. And I'm trying to get other people to, trying to make that part of the industry. And the way that you can help is hitting that like button. And Shovel agrees with that. And less is more says, yes, you answered my question, and you're correct. I took much more premium and did really well. So you might even be ahead right now, as opposed to me being down. You might be ahead just with that one little tweak that you made by taking more premium last Monday. But I wanted to be aggressive. Okay. Any more questions? All right. I'm going to say this in parting. If the P&L is not real, what else are they trying to conceal? I appreciate you guys, and I'll be back next week.